Digital gold. The term may feel like a modern fintech invention, but its roots go back over a decade when early platforms like MMTC Pump and SafeGold first experimented with fractional online purchases backed by the yellow metal stored in vaults. Of course, it stayed niche for years, overshadowed by physical gold, of course, and also ETFs and sovereign gold bonds. That is until UPI, smartphones, and micro savings apps finally pushed it into the mainstream. Over the last 1 year, the adoption curve for digital gold has turned steep. Buying has doubled, tiny 1 rupee purchases have become routine, and platforms like Paytm to PhonePe have made sure it's always accessible to investors. But beneath the convenience are concerns. Price markups, uneven audits, and absolutely no regulation. And yesterday, India's markets regulator
SEBI has issued a warning. It has issued a warning against digital gold. It says these products are completely unregulated, meaning SEBI does not monitor them, it does not license them, and it cannot protect investors if something goes wrong.
So, in this episode, we break down the rise of digital gold and why it has become so popular, how the backend really works, why trust and transparency are suddenly center stage, and what investors should know overall before they hit the panic button on buying or selling bullion. Listen on, it's Friday, the 14th of November. I'm Anirban Chowdhury. This is the Morning Brief. I first spoke to Abhinav Kaul of ET Wealth, who recently wrote a detailed piece on how digital gold works. Hi Abhinav, very warm welcome to the Morning Brief.
Hi Anirban, good morning.
So let's start with, why has the popularity of digital gold increased so much in the last 1 year?
First of all, digital gold is gold. It's a way to invest in the gold, which has risen around, let's say, 40 to 50% over the past 1 year, and which is a phenomenal increase when we consider gold as a safe haven bet. So there are 3-4 major ways to invest in gold. First is buying physical gold from your local jeweler. Second is gold ETFs that are traded on stock exchanges, which require a demat account and are regulated by SEBI. The third is sovereign gold bonds, which are government-issued securities backed by RBI, but there are no new issues of sovereign gold bonds anymore. Now, digital gold is a new app-based spin on an old Indian habit. So, digital gold allows investors to buy small fractions of gold online. Even some platforms offer digital gold as low as rupee 1 with 24/7 availability and secure storage by platform insured vaults. Now, demand for digital gold has increased in a big way in recent times. We have a data which shows that digital gold bought via UPI was around 762 crore at the start of the year in January 2025, which increased to 1400 crore by September this year. So you can see the demand has nearly doubled in less than a year for digital gold.
So tell me, Abhinav, you spoke about digital gold being sold at rates as low as rupee 1. What is the back end? How is this happening?
Right. So whatever the price of the gold is in spot markets, you get that price via digital gold. It's just that when you invest in gold ETFs, the minimum amount is rupees 100, right? And physical gold, you need to buy a coin which is like 0.5 grams or 1 gram, which could be around 10,000 or something. I mean, depending on the prevailing prices. Here, you can buy a digital gold as low as rupee 1, which means a gold equivalent to rupee 1 will get transferred in your name.
Which is like a really tiny amount, right?
Really tiny amount. So think of digital gold as an electronic receipt for real physical gold. So behind the scenes, two sets of players make the whole system work. The first is importer and the second one is distributor. The importer buys actual gold from the bullion market and locks it away in a secure vault. The distributor, which is usually a fintech platform or an app like Paytm, Google Pay, PhonePe, MyGold, Incred Money. So this distributor is actually the platform to buy the digital gold. So when you spend like, let's say 100 rupees on digital gold, you actually are really buying gold worth 100 rupees, right? But the thing is, some markup fees, taxes, platform fees gets deducted. So if you buy 100 rupees, around, let's say 96, 95 rupees worth of gold gets transferred to your account.
Understood. So when we buy the gold, Abhinav, who stores it? Which are the companies involved at that part of the back end?
So the fintech part is an easy part in this two setup system. That the importer or the custodian is actually the difficult part, and there are only few companies who have the scale and muscle to manage everything. Like gold involves importing, hedging, storing in a reliable way. So there is one government entity, MMTC Pump. MMTC is a government entity and Pump is a
Mhm.
Swiss refiner, and it's a joint venture between these two. And I think most platforms use their service to store the gold in their vaults, and they are the custodians. And when you buy the gold, you are issued a certificate with a unique number, which is specific to the gold that you have bought. And you can check it with the MMTC pump whether this gold has been stored or not.
Understood. Abhinav, what is the SEBI's worry around digital gold?
So the SEBI is saying, first of all, there are many products which are regulated by SEBI, which are regulated by Indian regulators. For example, we have gold ETFs, gold funds, and there are SGBs which are available in the secondary market, which is backed by RBI and the Indian government. And these are relatively safe and they are regulated. And for a second of all, the digital gold, which is in demand in a big way over the past 1 year, it is not regulated by any agency. And if anything happens, there is no legal recourse or there is no recourse towards regulators that investors have. So they'll be stuck and the money can get stuck.
Okay. Now, Abhinav, many digital investment platforms where you can buy digital gold operate private systems without independent audits, often with hidden markups in prices and limited statutory protection. How do you view these gaps in transparency and investor safety?
Sure. See, in the industry, it is generally understood that there are three custodians which are trustworthy. One is Safe Gold, one is MMTC Pump, and what is Augment. And the general advice is if any fintech player is offering self custody, then investors should stay clear of such platforms. They should not invest in digital gold through these platforms because all three names that I took, they are largely trustworthy in the industry.
Mm-hmm.
And there is a regulatory gap because even if you buy a gold from a local jeweler, there is BIS mark, right? And RBI or SEBI is not regulating as such, right? So even if when you are investing in digital gold, you should consider that there are risks involved. If these platforms goes bust, there is no recourse because there's no investor protection involved in these cases.
Right. So then, Abhinav, finally, before I toss it over to your conversation with another expert, what are the remedies you think that need to be immediately in place? Is it more transparency in pricing, audits, and licensing processes?
See, there are two regulatory agencies that can regulate digital gold. One is SEBI and RBI, and then they have to come up with a framework how they want to go about it. In terms of pricing, yes, there's ambiguity how these digital gold is priced because if you go to every platform at the same time, I mean, the price of gold changes every second or every minute in the spot market. But at the same time, if you go on these platforms, the prices will be different because the markup fees or the charges that they are asking from you is different. So the price of gold will be different. So there has to be a mechanism where there is clarity over the prices and the bifurcation of all the charges that are there on digital gold that has to come up front to the investor.
Next, Abhinav spoke to Harshad Chetanwala, co founder of mywealthgrowth.com, an online investment advisory firm. He started by asking Harshad whether he thinks digital gold is credible. If so, what are the pitfalls for investors?
So there is no doubt that there are many well-established players who are also like market custodians are have chipped in from offering the digital gold. So there's no question on their credibility. I think the regulation is a very important part when it comes to investing in gold because gold is usually invested from a long-term perspective. There could be some set of investors who would have invested in gold and then tried to sell off, considering that chalo thoda profit ho gaya. So let me just let me book profits and then come out. But usually gold is not seen from that perspective. Okay. Usually gold is a part of your long-term investment strategy. It's a part of your asset allocation for many investors. So hence, I think unregulated avenues will carry some additional risk, not in actual, but at least some sort of notional risk, which people will always keep in their mind. over the period of time, as you see more traction in these kind of investments, there is a possibility of something may go wrong because it is not regulated.
But Harshad, many platforms use services of custodians like MMTC Pump, which is a government entity. I mean, the gold, the digital gold that you're buying, that gets stored in their vaults. Still, where do you think the risk lies?
The biggest risk in the views of investor or an advisor would be who is accountable. As I said, there are well-established players, there are government entities who are involved in this product. But let's say if tomorrow something goes wrong, where do the investor go? In this case, if there is a space for a regulator to chip in, and then of course this product would make a lot of sense.
Coming to the pricing, one big criticism of digital gold is hidden or less visible charges involved in buying and selling digital gold. So, can you explain how transparent the pricing is in SGBs or gold ETFs compared to digital gold?
Sure. Abhinav, different avenues of digital gold have different charges. So when I say digital gold, I also consider ETF, and as you correctly said, SGB and ETF as digital gold. So some of these digital gold, which are to the best of my understanding, the charges are at 3% at the time of exit or when someone wants to sell. Otherwise, it's like ongoing prices at which you will buy, and you will at the ongoing prices, if in case you want to exit, you will be able to exit. And there's a charge of 3% when it comes to these digital gold platforms and digital gold. The gold ETF have an annual expense ratio. So gold ETFs are a product which are offered by the asset management companies, the mutual fund companies. And like any other mutual fund, there's an expense ratio. So in gold ETF, this expense ratio would range somewhere between 0.2 to 0.5, depending on which company is offering the gold ETF. And of course, sovereign gold bonds, they're almost gone now. So predominantly, these two forms of gold, digital gold investments that one can look at.
Right. There are like 3-4 ways to invest in gold. We have gold ETFs, gold funds, we have SGBs, we have physical form. Which, according to you, is the best way to take exposure to gold? If you can talk about the positives of each of these routes and the drawbacks in each of these routes.
So I think physical gold is still one of the most preferred way of investing by many investors. Because I think, a lot of investors like to have that feel and touch about that gold. But when it comes to the other form of gold, digital gold, I think there are features like, convenience, the check on purity. You don't have to worry about the storage, entry, easy exit. You can buy in, let's say, smaller denominations or whatever amount that you hold. You can buy that much of gold. That gives a lot of advantage or flexibility when it comes to investing in gold through digital format, or let's say through gold ETF or even digital gold in that case. Gold ETF still stays one of the best way to invest in gold, from all the perspective, including the regulatory aspect. What advantage gold ETF have is over the period of time you can build it. You may start with smaller denomination or smaller amount. Over the period of time you can build it, and it can take a shape or form of a decent part of your overall investment portfolio, which can be built gradually.
Right. So now, Harshad, after this SEBI warning, some nervous investors might think of taking out their digital gold and investing in the routes that you have mentioned, which are regulated. So what is the best route that you would suggest if someone is thinking of converting their digital gold into any other asset? What would be the best way?
So I think there is easy exit from digital gold. If in case someone's conviction is reduced because of what SEBI is trying to put forward.
Or they're trying to book some profit, let's say.
Yeah, or they're trying to book some profit. So when they are trying to book some profit, I don't think so that they will book profits and immediately invest in gold.
Okay.
Yeah. But what I'm talking about is those investors who have invested in digital gold and wanted to hold, right? Okay. If their conviction is reduced or they are worried, then of course, digital gold does allow you, exit at any point of time.
Right. Any charges or any taxes that they need to keep in mind while exiting their position from digital gold?
So the tax implication is the same. Okay. At the end of the day, it's a non-equity product.
So finally, Harshad, the surge in digital gold is of course an offshoot of the surge in demand for gold. So any message for investors putting their money in the yellow metal?
Even though the gold prices have surged, one need to be very cautious at this time. One need to look at gold from an asset allocation perspective. When you say asset allocation, you can still consider it to be around 5 to 10% if in case your conviction in gold is much more than that. Then you stretch up to maximum 15%. But there's no need for you to add that 5%, 10% or 15% at this stage at the current prices. So one of the best way to add gold, if someone still believes that you want to add gold, it could be to invest gradually rather than rushing to invest in gold.
Right. Thank you, Harshad, for talking to us.
Thank you. Thanks a lot.
So, digital gold has opened the door for millions of first-time buyers. Tiny amounts for cheap, instant access, and the comfort of buying it on your phone. But it is still an unregulated product, dependent on a few stakeholders' uneven, unaudited storage and transactions, and still exposed to pricing irregularities. The regulators need to step in fast, and most likely they will. Also, as Harshad points out, no investor should be rushing into gold simply because prices are running or everybody else is buying it. After all, the bullion, digital or physical, rewards discipline, not haste. That's it for today. You are listening to this episode on The Morning Brief. It was produced by me and Vinay Joshi, sound designed by Rajas Naik. A new episode of The Morning Brief drops every Tuesday, Thursday and Friday, wherever you get your podcasts. Also, listen to our new show, Corner Office Conversation, where we speak to the most interesting business and thought leaders from India and the world. Every alternate Monday on your favorite listening platform. Stay tuned.